Welcome to our weekly Forex forecast, and this is for trading for the week of December 2nd to the 6th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, as usual, we'll start off by taking a look at our calendar here. I was going to say content calendar is just our Forex factory calendar here. Okay, so starting off with, actually, let's go to a weekly calendar here. All right, so starting off with just building approvals out of Australia here, which are due this evening. And going into Monday, this is a heavy day with a lot of PMI numbers out of the Eurozone. So if the numbers are below expectations here, we're likely to have a negative impact on the euro. We also have ECB President speaking here. So at this point, ECB isn't really making much changes here in terms of the monetary policy, but should something change, that is likely to have an impact. So right now, market is being impacted by literally anything that comes out of the mouth of central bankers. So in this case, ECB has been following and easing, or they have been easing their monetary policy. However, if they make any kind of comments about not taking any further policy action, then that could be positive for euro. Or if they just stick to the way things are currently, maintain the status quo, that will be neutral for the euro. So we'll just have to look at what the comments are, and then we'll see a reaction in regards to that. And then we also have PMI numbers out of the US here. PMI numbers are important because they're precursors. They're leading indicators essentially to our retail sales, GDP numbers, all of those. So if the PMI numbers come in strong, that's why we generally see a positive impact on the currency, because that means the retail numbers and other numbers down the road are likely to come in positive as well. We do have cash rate here and RBA rate statement here. And at this point, not expecting any kind of rate cut from Reserve Bank of Australia. However, commentary, again, is very, very important. If they say we are going to hold the monetary policy as is for the foreseeable future, that will be considered a bullish statement, and we're likely to see Australian dollar go up on that. Or if they express concerns about the economy, then that would be dovish, and we could see Australian dollar drop. But right now, we're expecting them to just maintain the status quo and not really make any changes at this point. On Tuesday here, we have GDP numbers for the quarter out of Australia here. So looks like we are looking for a movement in our commodity currencies here. So keep an eye on that. We also have Bank of Canada here with their rate statement, not seeing any sort of a drop at this point. Now, we have heard two different types of statements from Bank of Canada. One, everybody was sort of dovish on Canadian dollar because in the last policy meeting, they actually talked about potentially cutting the interest rate, and that was taken as a dovish comment by the market, and we saw Canadian dollar drop as a result. However, then we did see Bank of Canada basically come back and say that they're not changing anything at this point, and now the sentiment is more neutral for Canadian dollar. So if we see a reflection or continuation of the comments from last time from their Bank of Canada statement that they are considering interest rate cuts, that will definitely be dovish, and we could see Canadian dollar drop as a result of that. So commentary, again, will be very important. We also have ADP non-farm employment numbers here. This number is important, and we usually see US dollar move as a result of this. This is also considered a precursor to the non-farm payroll numbers that come on Friday. So if the number is below expectations, then we're likely to see a drop in the US dollar or vice versa here. And we have retail sales numbers as well as trade balance number here for Australia. if the number comes in below expectations here, this will be negative for Australian dollar, because Australia it depends quite a bit on their on exports. So if that drops, then we have a problem, and we could see Australian dollar drop, because it just gives us not such a rosy picture in terms of the future forecasts. So keep an eye on that. And then we have OPEC meetings here. In these, out of these meetings, we can get comments, because they're usually journalists when these meetings are held. And a lot of times there will be comments regards to production cuts or not, cutting production, that type of stuff. And those comments can have an impact on oil as well as Canadian dollar. So if you're trading either of those, you want to pay attention to the comments out of the OPEC meetings. Ton of data here, nothing in the red. On Friday, though, very important here for US dollar, we have non-farm payroll, and these numbers are always important. They will cause US dollar to move, so keep an eye on that. So if we see a drop in either hourly earnings or in non-farm employment numbers, either one of these numbers can cause the US dollar to drop. And also we have Canadian numbers coming in at the same time. If you are trading dollar CAD at this point, you're impacted by both of these numbers at the same time. So I do not recommend trading dollar CAD when these numbers are coming out. So, but overall, both of these currencies will be impacted. There's always an impact from non-farm payroll numbers as non-farm payroll numbers, as well as the employment numbers out of Canada. All right, so that's what we have. And also another thing to keep in mind, for UK, we are getting fairly close to the elections here. And as a result of that, expect different polls to come out. And as we see poll results coming out, any kind of positive results for Conservatives winning the majority will cause British pound to rise. And if we see a drop in the numbers for Conservative Party, then we are likely to see a drop in British pound. So just keep an eye on that. Expect volatility in regards to British pound. And then also we're getting very close to the tariffs being put into place on December 15. So right now there is no agreement that was supposed to be reached in September, October. It has yet to be reached. And at this point, with the Hong Kong bill getting passed, China said that they will retaliate, but we haven't actually heard anything concrete from them. So if there are any comments that come out in regards to them retaliating, that will be considered negative for the equity markets. And we are likely to see like the yen crosses drop, Swiss crosses drop, euro dollar, euro pound, these currencies drop as a result of that, because that would create risk in the market. But looks like they don't want additional tariffs, so they seem to be lying low at the moment, but that can change at any time. So keep an close eye on the comments that come out. All right, so let's go on to our charts here. Oops. Where's the charts? Okay. Let's go to our euro dollar as usual. Okay, euro dollar was interesting. We just saw range bound move. A lot of things have been range bound for a while here. And this one was another one. It did drop nicely, but then bounced off of this support level at 1.0980. So right now, this looks bullish. We see a rejection of the bottom. So bias here is important. So bias here is to the upside. So bullish bias. But as we can see, for the last 3 weeks here, price has just been trading in this range. So that's what I'm looking for price to do. Basically, we have price has rejected the bottom. We could get a bit of a retest here, and then looking for a move higher. So looking for price to basically stay within the range that it has established, unless something changes drastically, in which case this one could go into the the higher range that it had established prior to this narrow range. So this is where price has been trading for last a little while. So at this point, first target is 1.1100, second target is 1.1180. So bias here is bullish for euro dollar. Pound dollar here, this one has also been trading in this range. As we can see, there was quite a bullish move there on Friday, and now we see that price is moving towards the top of the range here. So in this case, I would look for price to go further. So bias is bullish, but do keep in mind that one, there's a top of the range, so price can go back into the range. And secondly, this one will be impacted by any kind of developments in terms of the polls and any sort of comments that come out of UK in regards to Brexit or elections. So that's important thing. So here bias is bullish, looking for 1.3020 will be the target for Aussie dollar. Sorry for pound dollar. For Aussie dollar here, bias is bearish. Price has been dropping, and I'm looking for price to basically go down further towards 0.6720. So bias is bearish here for Aussie. First target is 0.6720, and then the second target is 0.6680. So bearish bias here for Aussie dollar. New Zealand dollar here, this one has also been trading in a range at the moment. So looking for price to maybe push up a bit more towards the resistance here, towards 0.4665. So this one could go higher a bit. So bias is bullish here, and then I would look for a move back in. So bullish bias here for New Zealand dollar. Dollar CAD here, this one is also trading in this range. It rejected the high here, so we could see price drop a bit. I would be careful with this one because with Bank of Canada, we could see price go higher. So basically, if price goes through 1.3320, I would look for it to continue higher. It can go test higher towards 1.3380. because it can still turn around right here. This one could just be a pullback for a further continuation. So, so do keep that in mind. But if it holds below 1.3320, then we could see price come down towards 1.3180. So right now, I'm just looking for a bit of a drop here. But if it goes through the high, I will look for a continuation higher. So my bias on this one is neutral. Euro pound here, this one has been going lower. So actually, let's take a look at the daily here. So we see that price was just going back and forth, but holding below this resistance level at 0.8580. And now it did a back test here, and I am looking for a further move lower. So we had a drop, a pullback, a drop, a pullback, and I'm looking for a continuation move lower here. So bias is bearish. Now, do keep in mind, we are into support or coming close to support here at 0.8485. So if price doesn't go through, it can turn, but the candle for this week is looking bearish. First target is 0.8480, second target 0.8450, so bearish bias for euro pound. Euro Swiss franc here finally broke through that resistance that it was struggling with for some time here. So bias here is bullish. Next target is 1.1050, so into the top of the range here, and this is where price could react. So if it doesn't go through the high, I will look for a move back down. So I'm looking for price to go into that resistance and potentially turn back into the range. So this is the range it's been trading in for some time. So looking for it to come back. But for now, bias is bullish. Target is 1.1050 into the high. Pound Swiss franc, this one also broke through that range here, and now it's moving higher. So it had this bullish flag going on, formation going on. It's broken through now. So that is confirmed. Bias is to the upside, but do expect volatility from British pound here, because we could see the poll results and other comments that could come out. So this is what I'm looking for, a pullback. And then if it holds above 1.2850, I will look for a further move higher here. So this was our flag formation. It's broken out now. So the rule is once it breaks to the upside, we're looking for a follow through higher. So this one could go all the way into that resistance here. So that's the bias is bullish, looking for a pullback. If it holds above 1.2850, I'm looking for a continuation. First target is 1.30, second target 1.3120. So bullish bias for pound Swiss franc. Dollar Swiss franc here, this one is still range bound. It's heading into the high here. It was stuck in this little range for quite some time, number of weeks here. It's finally made its way higher. So bias is bullish, but I would be careful because there's a pin on top. So if it doesn't make it through the high, then chances are very high that it can turn around. So this is the level we need to watch at 1.0030. If price goes through this level, I'm looking for it to continue into 1.0099, so 1.10, and potentially even higher. But if it doesn't go through this level, it can come back into this range again. So I would say bullish to neutral is the bias for dollar Swiss franc. Pound yen here, this one is pushing into the resistance here, a big move higher on the weekend, sorry, not on the weekend, just before the weekend, I should say on Friday here. And we have a big bullish candle close. So this one hasn't quite broken through the range, but should it break through the range, is very likely to continue higher into 142.90 and then 144.80. So bullish bias here. Now, the caveat here is that if it doesn't break through the resistance, it can come back into the range, and we could see things reverse like that. So be mindful of that, because it hasn't been able to break it through up until now. Swiss franc has already, pound Swiss has already broken through it. So this could follow course. But if it doesn't, then we're likely to see it come back. So if it doesn't hold above 141.80, look for it to turn around. But for now, bias is bullish. 143 and 144.80 are the targets. Euro as well here. All the yen, actually, yen crosses moved back up on Friday here. So we have a bullish engulfing candle here. So bias is bullish, looking for price to move higher towards 121.50. So this is what I'm expecting here. So bullish bias, looking for price to go right back into resistance. Target is 121.50. Dollar yen here, US dollar did not do too well on Friday. So we have a bullish candle here into dollar yen, but there's a pin on the top. So just be careful. Bias is bullish, looking for 109.90. But again, same thing here. If it does not go through Friday's high, it could turn around. But for now, bias is bullish. Next target is 109.90. And then after that, we're looking at 110.80. So bias is bullish for dollar yen as well. Aussie yen here. So just on the yen crosses here, an important thing to keep in mind is that any negative comments out of US and China will change the direction of the yen crosses. So if China were to come out and say that they are going to retaliate, for example, for that Hong Kong bill, that will be negative. Or if they say anything in regards to not being able to reach the agreement by December 15th, that will be taken as negative as well. And it will cause yen crosses to drop regardless of what our bias is. So just be aware of that. Okay, Aussie yen, this one is still in that range here. So for now, it is range bound. What I would look for here is, so my bias is neutral. As long as price stays below 74.30, I will look for it to come back down towards 73.50. This is the range it's been trading in, and I'm looking for it to stay in this range. If it does break to the upside, then 75 will be the next target, and then back into all the way into the high here. Or if it breaks through the support, then we are looking at 73 or potentially lower. At this point though, I'm neutral, just looking for price to stay in the range. New Zealand yen here, this one broke through the high here, and now it's just stuck, not stuck, sorry, it broke through. Now it's holding above. So as long as it holds above, this one can go higher. So bias here is bullish, and targets here, the first target is 74.80. And if it gets through that, we're looking at 71.50, potentially all the way into 72.20. So bias is bullish for New Zealand yen as well. CAD yen here, this one is also showing a bullish candle here. Now it does need to break through the high here before it can continue, but we do have a bullish candle. Next target is 83, and then we're looking at 83.50. So bias is bullish for CAD yen as well. All right, let's take a look at our commodities here. We'll start off with silver. Silver is still a range bound here. This is the daily candle. It is into support. It moved higher a little bit on Friday here. So from a weekly perspective, bias is neutral. We are still trading in this range. And the candle is completely neutral. So I would look for price to trade between 17.20 on the high side to 16.65 on the low side here. Now, if it breaks through the high, only then would I look for next move. If it doesn't break through this high, then it can just come back into the range, right? So that's why this is neutral. But if it breaks through, then we have next target is 17.41, and then we have lots of room to the upside, but that's not ready yet. We just have to wait and see what it wants to give us. Right now, this is just neutral. So neutral bias for silver. Gold here, we did see an important support here. So for last entire week here, price has been holding above this level. So gold is looking more bullish than silver. So this is what we see. We have a bullish pin bar, so I would look for a move higher. This is the range that gold has been trading in. So I'm looking for it to go higher towards 1480 and then potentially be range bound here. So bias is bullish for gold. Now gold is also impacted by US and China negotiations. Any negativity in those will push gold higher. So that's something to keep in mind. For now, bias is bullish for gold. Oil here, a huge drop in oil on Friday here. We have a bearish engulfing candle now. Bias is bearish. I will look for it to continue lower here. And if oil drops, then Canadian dollar will be negatively impacted as well. Just something to keep in mind. Oil here looking bearish. We could see a pullback into 56.50 and then a drop here. So first target is 54 and then we have 52.80. So bias is bearish for oil. Copper here, copper has just been going back and forth. It's been trading in this range, still trading in the range here. So bias is neutral. I would look for potentially retest here and then move towards the bottom of the range towards 2.56. So bias here is neutral, just looking for price to trade between 2.56 and then 2.65 on the top. So that is neutral. Bitcoin here, I haven't checked today's price on Bitcoin, but this one has been pushing higher as well. So as long as it holds above 73.30, it's likely to go higher. And only if it breaks through 8,000 would I look for next one. But for now, bias is bullish and I would look for a bit of a move higher. But if it doesn't break through 8,000, then it can come back, right? So just keep that in mind. For now, bullish bias for Bitcoin. Equities here, equities have been interesting. They are still holding on to the bullish momentum here. We see that price did pull back a little bit, but not, this is inconsequential here. So it right now still has, S&P 500 still has that bullish or bullish bias here, bullishness in it. So bias is bullish. Now, again, just to reiterate here, US and China trade negotiations will have an impact on this. So that would be something to keep in mind. But otherwise, bias is bullish. I will look for a bit of a pullback and then a further move higher. Target is 3180 for 3180 for our S&P 500. Now, in regards to the pullback, I will look towards 3130 for pullback. So this one could drop a little bit more here, but if it holds above 3130, we're looking for a further move higher. Now, should it break through this, then we could see price drop back into this range there, and then it can become range bound here. But as long as it holds above 3130, I will look for a move higher. So bias is bullish here. Target is 3180 and then 3200 for S&P 500, sorry. Nasdaq here, same thing. This is looking bullish. Price is still holding above that, our previous support resistance level, so bias is bullish. And next target here is 8500 and then 8550 are the two targets I will look at. Same thing on the daily chart here, we could get a bit more of a pullback into 8360 here, and then a further move higher like that. Bias is bullish here for Nasdaq as well. Pull back into 8360 and the continuation. From target perspective, we're looking at 8450 and then 8550. Dow Jones here, this one again is also bullish. We'll take a look at the daily first. So here we see that price has dropped a little bit. We could get a further pullback into 27,900 and then a move higher here. So bias here is bullish. And if you take a look at the weekly candle, you'll see it's still holding above here, right? So bullish bias, 28,400 is the target. And then we have DAX. DAX is trading sideways here. It's been trading in this range for some time. So I'm just looking for price to come towards the bottom of the range, towards 13,000, but bias is neutral for DAX. And FTSE here, FTSE actually dropped on Friday. So this one is looking bearish here. So if you take a look at the weekly here, we see a pin bar here. So bias is bearish, price rejected the top of the range here. So I will look for price to drop towards the bottom of the range or towards the middle of the range and then potentially the bottom. So I'm looking for a move like this. And then if it goes through this one into the next level. So 7250 is the first target, 7180 is the second target for FTSE. Okay, so that's all. So here, so there's a question, Swiss and yen. I don't really cover that. I don't believe I have a chart for that, but I'll see if next time maybe we could do that. And then the last thing here is Nikkei. Nikkei is also trading in a range here. We see that price rejected the high here. So we could see a drop in it. So we have a pin bar here for Nikkei as well. And we could see a drop towards 23,000. Potentially like that, or towards the bottom of this pin, 22,680. So it's still a range bound here. So bias is to the downside, looking for it to come towards the bottom of the range here. All right, so one last thing here before we wrap it up. Right now, I am currently running a promotion for Black Friday, if you guys are interested. So basically, if you buy the Learn to Trade Forex course, which is for $500, you get a 1-year subscription or 1-year access to Trade Vault for free, which is usually it costs $127 a month. So basically, instead of paying $1,500 over the course of the year, currently till tomorrow, till Monday, you have you have the opportunity to get the trade ball for free. So you get $1,500 worth of product for free if you buy my Forex course, which is Learn to Trade Forex. And if you're interested in this, you can just go to tradingwithvenus.com, and under courses, you will see Learn to Trade Forex course, and that's all you need to buy. You will get the trade wallet with that for free. So I have not done a promotion like this. This is probably the best promotion I've done to date, and I don't tend to do too many promotions. So if you are interested in doing this kind of daily analysis with me every single day, you will get access to that. I also send out a spreadsheet every single evening, which lays out the market direction for each pair that we look at, and also the profit targets and pullback levels, which are entry levels. So if you're interested in all of that, you can sign up for the course. Other than that, if you are just interested in receiving today's spreadsheet with the weekly forecast, then you can go to tradingwithvenus.com/forecast. Only if you have not signed up for this before. If you have signed up for it, you will receive it automatically. But if you're interested in receiving it for the future, you can go to tradingwithvenus.com/forecast. All right, so we'll wrap it up here. Have a wonderful rest of the weekend, and I will see you later. A question here, does the course include coaching? No, the course is just a video course, like any other course you would buy, but the promotion is that you get the daily analysis with me. So you would be on the live daily market calls with me if the time works for you, or you'll get the recording, but you will be able to ask questions from me, questions of me. You will also be in a private Facebook group, so if you have questions, you will be able to ask me, but it does not include one-on-one coaching. It's more a group-based program with videos for the course. All right, that's it. See you guys later. Bye for now.